Now it's time to catch up with one of our regulars, Debbie from Property Apprentice. Great timing to have you in studio today with an OCR announcement beckoning.
No, I timed it perfectly. Joking.
No, nothing in radio is a surprise. Everything is well constructed. But is this going to affect people out there prospectively looking at houses or people with interest rates?
Yeah, it could do. So with the OCR announcement, I mean, just about everyone's expecting it to increase by 0.5 today. So, what people need to remember is that the OCR tends to affect the shorter term interest rates rather than the longer term ones. At the moment, we're seeing interest rates trending downwards just about right across the board because even though the OCR can affect interest rates, there's this other thing called swap rates, which also affect interest rates, and swap rates are trending down worldwide. So we're seeing a period where interest rates are coming down, even though the OCR is increasing. So it's good and bad news for people. With interest rates rising, with the OCR increasing, banks' test rates for mortgages are really high, up to about 8%. So that makes it hard to get lending. Prices are still coming down, so great time to be buying, but hard to get lending. For people that have already got mortgages, having an increasing OCR can freak people out. So that's why I just wanted to talk about how the fact that the OCR is increasing doesn't necessarily mean that interest rates are going to rise. One of the things that I think people should look out for is we could enter a period where the short-term and the floating rates are higher than the longer-term interest rates. At the moment, the floating rate's higher than just about everything. All of the other fixed rates are on the way down, but we could enter a period where the 1 year and 2 year rates could be higher than the 3, 4 and 5 year rates, for example. And people always make the mistake of fixing long term when that happens because they look for the cheapest rate. So, yeah.
Are you looking at all of the international happenings with the Chinese at the moment, with all those deals falling over, all those bonds not being met, and then how that's transitioning back to New Zealand and affecting our economy? Because there's big talk on our economy down here being quite strong, and yet our OCR is still pumping points into it.
Yeah.
And long term, it looks like if that's the case and we are getting through that strong period, is it the right time just to wait a little bit longer if you are looking at interest rates, that longer term rate?
My opinion is that with interest rates trending downwards, you want to be careful about fixing for too long because, when interest rates are on the increase, if you break an interest rate and refix at a higher interest rate, you're not going to get charged break fees. You might just get charged a minimal refinance charge, like $10 or whatever for administration. But when interest rates are on the downturn, if you're coming off a high interest rate and refixing for a lower one, the banks will sting you with really high break fees. So, this is where people make the mistake of fixing long term because long term can be the cheapest rate at this stage or coming up to this stage. And so they choose the long term rate because it's the cheapest one on offer at that particular time. We're not there yet, but I suspect it's not going to be too far away. Look, early next year, we could see the OCR coming down.
Yeah.
So, what are you going to do? If you choose a 5-year rate because it looks cheapest at the time and then early next year interest rates plunge, then you're going to be like, oh, we made a mistake, let's break that cost. And it could be huge, the break fees.
Yeah, do your numbers. Personally, do your numbers on that, before. What I personally think is do your numbers on that. Wait till that period, I think, for a little bit longer before you make a decision on that longer term, because it does hurt. If you've got a longer term, people looking at 3 to 5 years, yeah, interest rates start to pump. It makes a massive difference.
Makes a massive difference. And there's, Tony Alexander, he's, everyone knows Tony Alexander, right? So he's recommending at the moment that, probably it's about right for people to start looking at just the 1 year fixed rate and just keep rolling that over until the long-term rates come down again, which I think makes perfect sense.
Hey Debbie, great to have you in studio. I'm down here in Christchurch. You probably can't see me, but
I can see you.
The housing market is pretty dire at the moment. And if you've got a couple of rentals, you're looking at it and you're thinking, man, it's pretty tough times at the moment. But for first-home buyers, when are we hoping to see a bit of a shining light coming out of the housing market, and when you're expecting that to turn around and maybe come back?
Yeah, I honestly think that the housing market could turn around a lot sooner than a lot of people think. And look, we don't sell property at Property Apprentice, so I've got no vested interest in saying that. But I do think that things are going to turn. One of the reasons I think things are going to turn is because just the numbers of people that are registering for our free events, that's been increasing over the last month or so. So,
That's interesting.
we tend to get the first glimpse at what the general public's thinking. When people start getting interested in learning more about it, that's an indication that they're getting ready to jump into the market. Like I said, at the moment, getting lending's the tricky part.
Yeah, banks need to they need to soften a little bit, don't they?
Yeah, and they will, because banks make money by lending money. But, as soon as bank rules start to relax a little
100%.
bit, then people will jump back in the market, and then we'll get the people wishing that they'd bought sooner rather than later. I think, Izzy, with house prices, having a bit of a downturn at the moment, it's literally like the whole country's gone on sale, and so the housing market is literally the only thing I can think of where people go, oh, they're having a sale on the thing that I want to buy, but I'm going to wait until house prices pick up again, and they do it every cycle. You don't, like if you're going to buy towels, and Briscoe's has a sale on towels, you don't wait till they stop that sale before you go in and buy them.
So true.
I was told
true.
a while ago that all the big housing companies, they wait till now and then they buy everything.
Yeah, a lot of them
They just go
do.
out and buy everything, at this time. So everyone goes, no, hold off. And the big housing companies go, no, buy.
Yeah, and experienced investors are out there shopping at the moment. It's like we call it counter-cyclical investing. When everyone else is sitting on the sidelines, that's the time to get stuck in.
Outstanding, Debbie. Helping Kiwis.
Need some money, Deb.
You're fine, mate. Selling your cows today, that's plenty. Helping Kiwis create better retirement plans. Propertyapprentice.co.nz.